I earn a lot of money but not able to save much, told this prospective client of mine when I first met him. A statement that we can all resonate with. Hi, my name is Anand K. Rathi, an investment manager with over 18 years of experience handling HNI wealth. In this video, I thought I would tell you a true story of my investor who created a portfolio of Rs.25 crores in a matter of 15 years flat. There was no social media back then. The only way to grow my business was word of mouth referral. One of my existing clients was very kind enough to refer my name to this prospective investor. We met up on a Saturday. I understood that he used to work as a delivery head for a large IT company in Bangalore. We used to ask, as a part of our introduction, clients' details and also ask them to fill a form on risk profile. I remember very clearly. The data used to capture his age, his income, his dependents, his savings, and also used to ask them certain questions on their meaning or understanding of risk. I noticed one thing, that for his age, he was earning good enough. And then I asked him what was his savings. He said nothing other than a home. I thought I missed something. Therefore, I repeated the question to make sure I got it right. I asked him, Mr. X, what is your current savings? He said, Anand, I don't have any savings. As it generally happens, client starts opening up with us. He started talking to me about his current lifestyle. He told me that he earns a lot, of course that was quite visible, but he used to spend it on expensive gadgets, luxury cars, exotic vacations, and stock trading. He said he was a very active stock trader, but unfortunately had lost over Rs 38 lakhs in the last 5 years. I said, wow, this is some situation. Great income, but zero savings. I told myself that I'll put in a lot of effort to change this situation come what may. I was very excited. To be honest, I was thankful that he gave me this opportunity. Now you may think, how can I be so sure of changing the situation? Watch the video till the end and I will also give you 3 key tips. They say time is a good healer but a great teacher. As an expert in investment management field, when you look at any client's portfolio, you can pretty much understand whether it was self-made or made by a serious investment professional or by someone who wanted to make a quick buck out of the client. Go ahead, see your portfolio. Do you see a lot of ULIPs? Do you see a lot of NFOs? Now, go back and check what is the selling behind it. Now, when you look back, do you see or do you feel the need for the same? Will you ever be able to trust that particular investment manager or that investment firm? No, right? Because time has taught you something. The same thing happened with this investor too. He realized his mistakes in the past and told himself that he would not repeat it again. Time taught him. Time is a great healer. Now on the other side, he had just turned 40 a couple of months back. So he had 15 great productive years, assuming that he wants to retire at 55. Therefore, he has time by his side. These two are enough for me.
We started discussing. During the discussion, we could see that immediately he can save Rs 50 lakhs by cutting down expenditures. Plus, he also mentioned that his wife is expected to bring in some savings coming quarter onwards. That's a good place to start off, I said. Then I asked him, can he aggressively save and also increase the savings growth rate? Please note, savings growth rate by 15% each year, with both of them now saving and earning. He said that looks like a stretch, but he was committed to try it. And finally, like always, I asked him, will he be fine with the market swings in the near term? Markets go up, markets go down. Portfolios go up and then start going down, and will only have a very, very clear long-term goal in mind. He said definitely yes. Finally, I told him, will you be okay for a corpus of Rs 20 crores of retirement portfolio in 15 years of investing? He was shocked and couldn't believe it. He checked if I was really joking or was it a fact. I just told him that a saving of rupees 20 lakhs growing at a rate of 15% can lead to a corpus of rupees 20 crores at an investment growth rate of just 12%, quite possible. So, what happened in those 15 years? The prospect then and a client now moved to UK for a brief period of 5 years, and therefore he could achieve the 15% incremental savings target pretty smoothly. Things always change in long term, please remember. Then, of course, we had to go through a couple of drawdowns, couple of withdrawals owing to some emergencies and differentiated needs. That is also a part and parcel of the plan. And finally, we had to sail through bad markets in the year 2008, 2013, and who will forget 2020? But the big surprise is that this May 2021, we celebrated touching the milestone of rupees 25 crores of portfolio in flat 15 years. Rupees 5 crores more than what we had initially thought. By the way, he hasn't retired yet. And we plan to have a corpus of rupees 50 crores when he actually does.
Time for those 3 key tips. It is important that you start early and hold on to your investments as long as you don't need the money. Always increment your savings higher than the increment in your income. And third and the most important, cut out the noise. Stay away from all those bad media, bad news that you hear. I know it is very tough, and that's the reason why you should choose a wise and a right investment manager who will help you grow. Good luck.